Hello everyone, and thank you for joining. I'm going to start in just a minute, just setting the titles for the live stream just to make sure more people see it. Let me edit this. And if anyone's watching, I would greatly appreciate it if you could just let me know that you're here and type something in the chat, just so that I know that you guys can hear me. My mixer thinks everything is good, but you never know sometimes with these live streams. Let me check my sound once again. All right, that should be good. Okay, and then let me check if we're live on Periscope as well. Thank you, Eddie. That's very helpful. And we should be live on Periscope too. Awesome. Thank you guys for watching. So let me switch over to the webcam. Oh, that is misaligned. Expand that. Thank you for watching. My name is Charlie. I'm from altcoinmentors.com. And today I'm going to talk about my thoughts on the market. Are the bulls actually back in crypto? Are we going to see Bitcoin go up to the $70,000 target that I wanted for the end of this year? Or are we going to take a short trip down to the 3,000s or 4,000s before then? That's the question I'm going to answer in the first half of this live stream. So we're going to shoot for about an hour. And then the second half is going to be me answering your questions. So I am willing to stay for up to 1.5 hours. After that, I really do have to go. But so it'll be anywhere from 30 to an hour and a half, depending on how many questions there are. And I'm sure that there are bound to be quite a few. So don't forget to subscribe to our YouTube channel or follow me on Twitter, depending on if you're on YouTube or Periscope. And also, if you would be so kind, please do share this with your friends. It really means a lot to us, and it is the best way that you can thank us for providing the content. It is not, believe me, it is not easy to keep up with everything. So again, thank you for watching. My name is Charlie, Altcoin Mentors, and I'm going to dive into the screencast right now. So this is the weekly chart. Oh, let me take this off first. Oh, I did forget to mention one thing. So if you go to altcoinmentors.com/strategy, we're going to be sending out an email newsletter of our crypto strategy notes every single Monday morning. And that is going to give you an overview of the price action from the week before, as well as what we're looking for in the week ahead. So this is not only going to be Bitcoin. I know that it has been more focused on Bitcoin recently, just because we're in a correction, and it's in my opinion not really worth looking at a lot of altcoins during corrections because they tend to get hit even worse than Bitcoin, and you can't really short a lot of them. So Bitcoin just remains the most interesting in corrections. But don't worry, if this indeed is a bull market again, we will definitely be covering a lot of altcoins in the future. So again, that is altcoinmentors.com/strategy, and you can that'll be sent to you right away Monday morning. So let's get into the charts. So I want to thank the person on Twitter. I'm sorry, I really forget your name, who told me about the Brave New Coin Index. So this is symbol BLX on TradingView, and this gives you price history for Bitcoin going all the way back to 2010. So if anyone wants a long-term chart for Bitcoin, this goes even farther back than Bitstamp. So you just have to be aware that this big bar right here, this is just slippage. So it says that it goes down to 1 cent, and Bitcoin did not. I'm using for my Fibonacci extensions 0.05, so 5 cents instead, just because it gives more reasonable targets. Let me just show you the unreasonable targets just for fun. So if you really believe that Bitcoin had started out at the very low end, so this is actually from the very first price history of Bitcoin, you can see that it was 60 hundred thousandths of 1 cent for 1 Bitcoin. You can see that the eventual price target is a number that I am not able to say because there are too many numbers. Probably 500 trillion. So we're going to go ahead and say that that's not what's going to happen. So that's why I'm using these numbers. And before we get into it, I know that a lot of you who are watching are new to the channel and perhaps new to technical analysis as well. So I'm going to go over a brief history, well, not a history, but a brief description of Elliott wave, since that is my primary method of technical analysis. So Elliott wave theory basically says that there are 5 waves in an impulsive move, and that they are very rigorously or very consistently in the same ratios to each other. So typically, if you count this as 1, so the price history here as just 1, this is going to be 0.618, this is going to be 1.618, 0.618, and then 1. And this has been used since I think Elliott first discovered this in the 1940s, and he actually made some price estimates for stocks and the market in general, and it actually came reasonably close. His time estimates were completely off, but his price estimates at least, were hit pretty closely. So undoubtedly, we can also use this in cryptocurrencies. The entire thesis behind it is that markets are just based on sentiment, and that sentiment as an aggregate is predictable on a large scale. And in cryptocurrencies, it's even easier because a lot of them you don't actually have to worry about any of the fundamentals. It's just pure sentiment, pure speculation. And so that is where technical analysis really shines. So I'll delete that. So that is the 5-wave move. You also have 3-wave moves. So that's when you're going in corrections. You can see that. And corrections are much harder to predict than impulsive moves. They have much wider price ranges, and they can all do all sorts of wacky things. So for example, you can get a triangle as well. So you've probably seen a triangle before. So that's just one thing. And then there are also things like double zigzags. So WXY, where these are 3s, and then you have triple zigzags. I'm not going to draw that there, but corrections are much harder to predict. And so that is why you will have noticed that almost no one in general has been able to predict when the market is going to bottom right now. I mean, you saw people calling bottoms at like 12,000, then you saw another bottom at 8,000, then people called it at 6,000, and now people are calling it again. So it's really difficult to predict when exactly things are going to bottom. It's much easier to predict when things are going to top. But going back to this weekly chart, like I said before, there are very specific ratios that you can take advantage of to determine long-term price targets. So if I turn on the Fibonacci ratio tool, so this is an extension from here up to the 1 and then down to the 2. So it projects this as 1 from this location. And you can see that how close this price move came to what was predicted. So it was predicted to be 1282, and that was 1177. So off by $100. So off by less than 10%. And you can see this one hit it right on the money, and then corrected right also down on the money. And this one overshot it by just a tad bit. And now we're aiming towards this line right here. So that is at 69,403. So in the long-term chart, there's nothing has changed in Bitcoin. It still looks good to be on track to hit its long-term target. The real question is, will this draw out like 2014 to 2015? Will this be, how long was this correction? I'm pretty sure it was over a year. Yeah, 420 days. So are we going to see a 420-day correction? So that would be almost a year more. Or is it going to just go up from here? So in terms of is the correction over? What I'm going to do right now is compare the past wave 4s in terms of how far they retraced from their wave 3. So if we take that Fibonacci off there, and then this is going to be the Fibonacci from this here. So, or let's not do that one first. Let's do this one first. So this is from this wave 2 to this wave 3. And you can see that if we zoom in, that we hit right in between the sweet spot. So it is predicted that a wave 4 will retrace the wave 3 between 50% and 23.6%. So that is the red box that I just drew there, and you can see that it first overshot a bit. That might just be slippage actually. Rebounded back up for a B wave and then down for the C wave, and that went a little bit past the 618. So the 618 is a really important number in technical analysis, and the 618 is what is ideal for a wave 4. So now let's measure this larger wave 4 in 2014. So this one, again, we're painting it from this 2 to this 3. And you can see that if I draw the box where it should have retraced to, that it was definitely in the range, and it almost hit the $131 target. So what was this? The bottom was at 163. So it was within 15%. So pretty close. And so now we've seen it overshoot that 618 a little bit and then undershoot it a little bit. So now let's go over to where we are now. So this was the wave 2 over here. We have our most recent wave 3, and you can see that if I draw the box, where we would have expected to retrace is between the numbers of 8,200 and 3,000, with the ideal being at 4,800. So certainly we have seen before that it can undershoot it a bit. So this went only down to around a little bit under $6,000. And so as we've seen before, it is certainly possible that that is the full correction, but it is also possible that we have much farther down to go, possibly all the way down to 3,000. So we've never seen a 0.5 or a 50% correction on a wave 4 in Bitcoin before, but it is within the rules of Elliott Wave that it is possible. More than likely, it will not actually reach the 3,000, but instead bounce somewhere between the 4,000 and 48,000 if we do go lower than that. And I'll explain those the significance of the 4,800 to the 4,000 zone a little bit later. So, and then, as I said before, the long-term target this was from data from 2010 to 2011. So that target painted it at $70,000, but we can get a little bit more recent than that using the price data afterwards. So I mean, that was, what's 2018? So that was 6 years ago. So we have price data after that. So let's see what that price data says about where this is going to go. Hint, it's in this red box. So typically, I guess we'll compare it with the past as well. So it's this one. So you can see that, again, we're using the Fibonacci from the 2 wave to the 3. So you measure the 3, and then you can see where it went. So it went in between the 0.618, or the 1.618 extension, and the 1.382 extension. So Bitcoin has a tendency to have extended fifth waves. So normally you would not expect to see them above the 1.382 extension, but Bitcoin likes to go above that. As you can see here, it went much further above that. You see a little bit more typical one if you measure from this 2 to this 3. You can see it extends up to the 1.382 almost exactly. And then if we do the same from this to this, then you get this box right here. So it will at least, if this is correct, go above 47,500. So 47,500. And the 382 target would be 81,580. And then I've never seen a wave 5 go up all the way to the 1.618. It's possible. So that would be almost $200,000, but definitely don't count on that. I can tell you that I'll definitely be selling the majority of what I own once we get up to this box here. And we're really going to look to get out of Dodge after that if it starts to go down, because as you can see, it's not a pretty picture after that. 1,300 from 670,000. Most likely it won't go this far, but you have to be prepared for it. All right, so that was the weekly chart. So now let's, not that one. Now let's look at the daily chart. So again, as you saw, I'm using the BLX symbol. So this is the Brave New Coin Liquid Index. So this is just end of day price data. And as I said before, you get corrective waves in ABCs. And so the question is this a full structure? Or are we going to go farther down? As I said before, ideally, we would go down to the 4,800 area. And so that's why currently I'm looking down. And this most recent price spike, while it is definitely possible that it morphs into this entire thing being the bottom, it is far from definitive. So I'm going to go through all of the different possibilities that could possibly happen. So the first possibility is that we saw this as a low B wave. So we had A right there, B right here, and then we're going to go down to a C around that area of 4,800. So we're at around 8,400 right now, so we have far more downside to go. And I'm going to go into the structure when we get into the 4-hour chart in a little bit. So that's one possibility. The second possibility is that this was a local bottom and that we're going to go up to, first go up there and then go down, because this structure did not retrace as much as is normal in a B wave. So it would have had like to be up here. So that's why we can say that this is not done. So one of the key features about LA waves is that they are fractals. So you have waves within waves. So you would have this 3-wave structure inside of this 3-wave structure, and that we hit the B right here, and that we're going to go up to around 13,000 and then drop into that ideal 4,800 region. And so those are the two, I guess, quote unquote, normal expectations. But like I said before, this is a correction, and it's very possible that we could have a non-normal structure. So the first of those non-normal structures would be a triangle. So now let me use the actual triangle count. So you have a triangle here, and then this is going to be, this is either B, or this is, again, 3-wave structure into B. So I guess we'll say that it's into B, there, there, and then there. So the triangle is actually the most bullish of all of them, just because it means that we don't get a lower low after this. It's the only thing is we just get higher highs from here, or higher lows from here. We also get lower highs. But after you get this action, then after the E, you are bullish up from there, you start your 5th wave, and everyone's happy. So that's the most bullish of all of them. But I will say that triangles in crypto on a larger scale are not very plausible, or are not very common. So I've only seen 2 on a larger scale. One was Ripple a few years ago, and the other one I can't remember, but I can remember the structure. And it was, yeah, almost exactly like this. So the triangle is one structure. And then the other more unorthodox structure would be the leading diagonal. So that means that calls for us having bottomed at a little under 6,000 over here. So this is the complete 4th. So it would have been A, B, C. And then for the 1 of 5, so remember that these are fractals. So we would expect to have a 1, a 2, 3, 4, and then a 5 up to this target here. And then for this one, it would be a leading diagonal structure. So it would be something like this. So where you have 1, 2, 3, 4, 5. So, and then this would be bang down there. You have your 2, a 3. Oh, oops. 3, 4, 5. So, as you can see, no one likes corrections. Very hard to predict. Because imagine you have to do this on a smaller scale at each one of these areas too. So, yeah, lots of possibilities. But the good thing is that 3 of those possibilities are eliminated if we go below this 5900 area. And I know that this has not been particularly helpful for you because you're like, okay, so which structure is it? And I'm going to get to that when we get into the 4-hour chart. So let's just save that. And we can go into the 4-hour chart to hint at what is coming next. So, as I said before, the 2 most orthodox patterns would be just where we had the A down to here, where we have a B up to here, and then we go further down. And so that was what I thought was going to happen for a very long time. You see, I had a tweet. I think it was either in late February or early March, where I wanted this to happen. Where I said that this was just this was 1, and this was going to go up into 5, up to this area here, and then we come down. But it turned out to be far more bearish than that, where it didn't even make it past this higher high or this high, and instead kind of did a double top and then went down. And so that threw me off a bit. Lost a little bit of money there. And since we retraced so much from between here, so this is, you can essentially think of all this action as an inside action between this range from 6,000 to 12,000. All this action here, I would have liked this to stop at here to go up into that B wave. But since it went so far down, at this point it looks like the B might have topped here, and then we just go straight down to here. And I'll show you the significance of each of these lines. So I drew these lines because if indeed this was the top, then we are going down into the ideal quote-unquote range from 4,800. So you can see I still have the fib from there. So you can see that the 0.618 is this first green line here. And then, like I said before, there's lots of ratios and symmetry involved in Elliott wave. So you can take the labeled structures here to see where exactly this would go down. So this is the fibs from here to here, painted from here. And you can see that the 1.0, it would be around a double bottom with the 5900 area. But if we wanted to go lower than that, you can see that the 1.618 extension is around 4,300. So that's this third green line here. Then you have, if this was A, B, C, I need to update this a little bit, but the target doesn't change much. It goes to right around 4,600, so that's this second one. And then you have, not that one. Yes, this one. So that is from here down to there, up to there, and that targets the lower end of the range, which is 4,000. So the reason I put the box here is just because there's a cluster of targets that are quite close together. So that's again between the range of 4,800 to 4,000. So what I thought a week ago was going to happen was that this triangle was going to break and this go down, straight down. In fact, I had quite a large short position here. Thankfully, right before it broke, I got kind of scared isn't the right word, but I guess it's fine here. So I tightened up my stops a lot, and I only ended up losing around 0.5%. So that was fine, but it was pretty much a perfect bear setup. And trading is all about possibilities, so of course it's all it was always possible that it would have broken up instead of down. So now that we are up here, it leaves more question on the table of whether or not we are in fact going to go straight down here. So you can see that I have a red alternate count. So the red alternate count is that we have a leading diagonal here. So from this price action here, we're going to go down into this area-ish. Let me turn off those fibs. So we'll go down to tag between around 7,600 and 7,400. And then we'll go up to complete the one, drop down again, and then go up and up. And you can see that I have Alt X here. You could think of this as a B, and then possibly we go down over to this region. But like I said before, it's also possible that this entire 5 is just one of the triangle, or it is part of the leading diagonal. So that's going to depend on, again, if this holds support here, if it's part of those more bullish structures, or it just goes all the way down. And then coming to what the price expectation is right now. Like I said, I do expect it to go down about, say, between $500 and $700. Although Bitcoin does have a recent history of completely ignoring TA, or doing the less probable thing. So, for example, if we look at the fractals here, we would so you can see that you have this flagpole and then you have a flag up. Okay, so let's find that somewhere else. So you have upward flag up, so it drops down here. But then you also have upward flag up and it goes up. You have that here too, upward up, flag up. Up, flag up. You also have it here, up, flag up. So, yes, Carlo, there are lots of possibilities, and a lot of people think that the point of TA is to know exactly what is going to happen at any given moment all the time, and to always be able to be in a position. But that is a myth. TA is actually just supposed to recognize where and when you should trade. So that is why I am not in a position right now. It could go up, it could go down, could go down more. The standard expectation would be for it to go down more, but it's not high enough probability that I would put money on it. So again, we could see Bitcoin move up and this would just, the 3 would be up here. And then it would go down. But I will say that this is definitely not a good long position, because if it goes up, I mean, if you look at the technicals, these technicals are going down. So this is running out of bullish momentum, and it's going to drop eventually. So definitely don't have a long here. All right. So like I said, there are lots of things that could happen. And if this breaks support, so what really needs to hold, again, is the 50% retrace. So that is at 7,400, 7,390 to be more exact. So if it breaks that support, I'll make it here to make it less confusing. If it breaks this support here, then that will be our first clue that we are on the primary path that I have here. So we would expect it to go down to this one, up to here, down, down, and then into this. So this is actually what I prefer the most. Mainly because it eliminates all the other possibilities. So if we keep going up, we still have to deal with the possibility of the B wave, the leading diagonal, and the triangle. Whereas if we go down, there's only one thing that can happen, pretty much. It's going to go down. And then the only question after that is it going to stop in the support zone, or are we in a larger 4 and is it going to go down to like the 1200 area? But that's easy to trade because you just don't enter into a position until it starts to rebound, right? So versus with the more complicated structures, they're very much more difficult to navigate profitably. And plus, I would like to be able to get to that $70,000 target as fast as possible. So I know it's getting a little bit darker. Can you still see me? Yeah. All right. So I'm going to take questions in one moment. So I had two things to say before then. The first one is that for the people who were not able to catch the beginning, I recommend that you watch it later just to get the full picture of what's going on. But also, I'm announcing right now a weekly strategy newsletter. So basically, the summation of everything I've just said, plus a little bit more, is going to be able to be delivered to your inbox every single Monday morning. And so if you want to get that, go to altcoinmentors.com/strategy. Again, altcoinmentors.com/strategy. And if you're not in our Telegram group, you can find that at altcoinmentors.com/telegram. Alternatively, you can go to t.me/altcoinmentors. And in there, we have a model portfolio that has outperformed the market since we started it. So we started about a month ago. In that time, the market is down 6%, and we are up, let's see. I think it's somewhere around 20%. You can see we're not in a lot of positions right now. So we are up 22%, whereas the market cap, crypto has gone down 1%. So considering how I am a long biased investor, I would consider that was pretty good. Although there were quite a few good shorts in there, mainly from Peter, because he's just a pure day trader, so he doesn't care which side it goes to. Whereas I would like it to go up. And then the second thing that I wanted to mention before we get to questions is going to be a follow-up to the Don't HODL video that we put up. So I just want to show you that real quick. How do I go to my own channel? I think I just clicked that. That is not what I wanted to do. What? Anyway, you'll be able to find it. It's if you go to our channel, altcoinmentors.com/YouTube or youtube.com/c/altcoinmentors, you'll find our most recent video is called Don't HODL or something of the sort. It's crypto investing is not hodling. And that is Peter talking about how Warren Buffett is not a hodler and neither should you be. If you look at the past in the dot-com bubble, a lot of the companies are actually still catching up to what they used to be. And so if you sell at what is closer to the top than the bottom, then you can always buy back closer to the bottom than the top. And over time, that adds a lot to your portfolio and is not as hard as you would think to do. So if you learn, so first of all, you can do it off of just emotions. What is the sentiment in the market? By the way, this is a response to someone who asked me, how do you know when to sell? If everyone around you on Twitter who owns crypto is completely euphoric, talking about the moon, talking about what they're going to buy, it might be time to sell. It is probably time to sell. I remember in early January when all I could think about was how rich I was going to be. My portfolio had grown such a tremendous amount that I could not think of a way that it would go down. And that is the time you recognize it and you say that now is the time I'm going to sell because this is getting ridiculous. The market cap had gone up like 10 times in just 1 month. So again, if you're euphoric, it's probably time to sell. And then there's the very famous quote of when to buy. So buy when there's blood on the streets, even when it's your own. So if everyone around you is just completely panicking, like the market's going to zero, Bitcoin's never going to recover, that's when you should consider buying. So I think the 2 times that had happened were here when it went down to 5,900, and then again when it was not here. It was March 18 here. So this was when I really got trapped because I really thought that this was going to be capitulation. I mean, you had like some coins that had ridiculous wicks down. People were panicking on Twitter. So I really thought this was the bottom. But yeah, if people are panicking, probably time to buy. People are euphoric, probably time to sell. And then of course, you can also learn TA if you want to if you want to be a little bit more precise than going off of feelings. And so that is one of the major things that we're going to focus on this channel, of exactly how we have in the past used TA to identify tops and bottoms. And usually, like I said before, TA doesn't predict the exact top. It just predicts the area. Like is more likely that this is a good sell point than not. And the third alternative is that you can just follow someone who knows what they're doing. So if you're following us, hey, like, good for you, because we are going to do our best, very best, to tell you exactly what is going on. You'll notice that so far we have not taken that many positions. We have not taken any huge positions in our model portfolio. If you look in the past, we have our positions before. I entered quite a few positions here. Like I said, I thought it was the bottom. And then we got out of most of them profitably or break even once we realized that it was not actually going. So yeah, once we are convinced that it is more bullish, then we will call those out in our Telegram, email, and it'll definitely be in the model portfolio as well. We'll probably make a YouTube video about it too. I'll be doing these every week. And just looking ahead in the future, it's going to be this point. If we are bullish, it's going to be this 2. So if this fills out, goes down there, goes up here, and then retraces 61.8, then it's going to be, yeah, it's going to go down here, and this is when we're going to buy. And now take questions. So Carlos says, based on your own experience, isn't TA more profitable on a shorter time frame? No, I would say that it is not. So the more volume that there is in a market, the more accurate that TA is. So that's why if you have a really low volume coin, a really new coin, doesn't have a large market cap. So I pointed this out in Telegram. So like Ren, we had entries for Republic Protocol, Origin Trail Track, and Ravencoin, RVN. Those don't have charts, and they also don't have much volume. So doing TA on them is a very limited use. You can try, but it's easier to go by feel for those. So for example, Republic Protocol went up by 80% today, or in the past day, so I sold it. So you can just go by general market sentiment for those. But on something like Bitcoin, where there's a lot of volume in the market. So for example, this short squeeze here, over $1 billion of Bitcoin changed hands. That's a ton. $1 billion in one day. It was probably within an hour, actually. So TA definitely works. And it works better on the longer time frame. So on the weekly chart, like I had shown you before, where is that? Okay, that's not going to work. Go here. Weekly. By the way, guys, just put your questions into the chat, and I will get to them afterwards. So again, weekly chart. You can look at how perfectly these hits were. So from here to here, this is from 2010 to 2011. Look at how close that hit. Nearly perfectly. Look how perfect that was too. So this is definitely not just. So yes, I know a lot of people are going to scream at me, especially the statisticians here. It's just a well-chosen example. Like, it could just be voodoo magic. Everything's random. It can certainly just be, you're looking at something that you're wanting to find. And while that is true to some extent, it has worked more often than it has not, in my experience. So next question was, can you check RSI every time is fighting with the 60 line coming down? Eddie, what time frame is that? Let me close this. Is that the 4 hour or something else? RSI, I mean, I have these at 60, right? So, I mean, clearly it's breached 60 before. I mean, so it breaches 60, we look here, it breaches 60 here. And if you had sold here, you really wouldn't have liked that. On the daily. I mean, again, like it went the last time on if you over here, like it went above 60 around like 7,000. So you can't use, in my opinion, you can't use RSI. Just it's simply oversold or overbought. So you have to use it for divergences, which is what I recommend. So when you have, is there an example here? Can't find an example on the daily chart. Here's an example. So look, from here to here, Bitcoin is the price is making a higher high, but on here it is making lower highs. So you can see that there's going to be, the more divergence you get, the more severe this downward correction is going to be. So you can see that this was one of the few times when it corrected significantly, and then there were divergences there. Oh, actually, there's a divergence here too. Look, lower high, higher high. So, and again here, higher high, lower high. So divergences are a really good way to tell when there's going to be a significant downturn. And then you can look on divergences on everything. So RSI, MACD, TSV, those are just my preferred indicators. And then speaking of indicators, Carlo, what are some indicators you'd advise us to use? So I almost exclusively use price action and Fibonacci's. So and I recently started using indicators, so I'm still actually learning about how to properly use all these technical indicators. I've just been using them for divergences, and there's some other patterns that you can kind of suss out in these, but I'm still learning that. But I would certainly recommend RSI, MACD, and TSV is something new I'm trying out. Not sure if I'm going to keep it, but certainly RSI and MACD are very useful. Fibonacci's are, of course, invaluable. And then other indicators. I guess the other ones that people like to use are volume, so both the visible range and the volume on the horizontal and the vertical. So I know that Peter likes to use volume on both of them, just to, because if there's high volume, there's a greater chance that it's going to be that move is well supported. So if it's going up into increasing volume, that's more likely that it's actually going to continue higher, versus if it's low volume, it's going to probably drop, stuff like that. I don't personally know how to use volume well enough to use it, so I'll probably study that at some point in the future. Same with visible range. I used it for a little bit just because it's kind of nice to, you can see where most people have put their orders. These are not the right settings. So for example, you can see that a lot of volume would have been here, a lot of volume is here, and then you can, those are points of support and resistance without having to draw the lines. You can just kind of see them in the volume profile, so that's pretty useful if you're looking for support and resistance, but you can normally see those support and resistances on the chart anyway. So again, it just makes your life a little bit easier, but it's certainly not invaluable like RSI and MACD are. And then also recently, I've been learning Ichimoku Cloud. So let's see, I'm on the 12-hour. So let's do the double times 2. Oh, do I not have a double times 2? My scripts. I do, it's just not, what? Anyway. Yeah, so I've been learning how to use Ichimoku Cloud. And it is, there's definitely something there, because one of the things is that it's, I forget what this line is called. It's called I don't know what it's called, but this red line here, you can see perfect bounces off of there, and those were apparently in the Ichimoku system. You're supposed to short there, so it certainly worked out very well. And you have the cross recross, which is also a bearish sign below the cloud, so that would have been a great time to sell, and you can see that it was. So there's definitely something here, but I'm still actively studying it. You're at your night shift watching me? Nice. cryptocurrency trading is certainly more exciting than most day jobs. So, yeah. Are there books you read about TA? I've read lots of books about TA. Can't recommend all of them. I would say that if you like chart patterns, Schabacher's Technical Analysis book is really good. What else for technical analysis? The Encyclopedia of Chart Patterns, Technical Analysis and Stock Market Profits. The problem is that these are pretty expensive books, and you can pretty much find all the information online. So I wouldn't say that they're all very good. A lot of what I learned about TA was from babypips.com. So they focus on Forex trading. If you go to their education, how to trade Forex, they have a pretty in-detail course on a lot of indicators. So I'm a very big fan of this if you're just starting out. And then if you're also trying to learn TA, you can find a lot of really good, just find people who you think are doing something right and ask them questions. Ask them exactly what you're doing now. What resources do they like? If you want to learn Elliott Wave, I cannot recommend ElliottWaveTrader.net more. This is where I've learned everything. So they have a 15-day free trial. You're going to see me in there posting stuff. But yeah, love this site. All right, so we're coming up to 50 minutes. So if you have any more questions, please, please, please ask them. I booked out an hour for this, so I have nothing else to do after this. That's not true, but I would like to be as helpful as possible if anyone has any additional questions. So don't be shy, anything you want. All right, I'm gonna give it 2 more minutes for anyone to ask a question that they want. And then I'll go into a summary of what I've just talked about as well as the exit. Do I advise margin trading? If you know what you're doing, or you want to eliminate counterparty risk. So by counterparty risk, I mean if you don't want to keep your money on an exchange and just keep it on a hardware wallet, you can lever up the 1/10, say, that you put into BitMEX, and then just trade that at 10x instead of having all of your money on the exchange, which is obviously bad practice. Next time, stream HD. Am I not in HD? Really? I'm sorry, guys. I'm not in HD. Thank you, Herman, for pointing that out. That is a great catch. Damn. All right, we'll do that next time. Clearly, this is a work in progress. All right. Any other questions? All right, cool. We're going to wrap up then. So, once again, I'm Charlie from Altcoin Mentors. And if you want to get these strategy notes, we're going to be delivering them every Monday morning in your inbox. And you will be able to see what we think about the price action in the past week, as well as what we think about is going to happen in the week ahead, how we're approaching it, every single very actionable items. So, again, that is altcoinmentors.com/strategy. I cannot type. /strategy, and that will take you to our opt-in page. Enter your first name and your email address. Oops. And you can go from there. Once again, also you can go to altcoinmentors.com/telegram. That is where we post everything during the day. So I have charts every single day there. And you will be joined by our very gracious 234 members in our channel. We thank you all for choosing to follow us and follow our advice. Also in that Telegram channel, you will find our model portfolio. So you can get that through altcoinmentors.com/portfolio. And that will take you to this opt-in page where you can see all of the trades and investments that we are making right now. That will give you access to the spreadsheet right here, the model portfolio, where we have averaged 22% in the past month, we have weighted some 22% trades, whereas the market is at -1%. So pretty good if I do say so myself. And then finally, you can follow me on Twitter, twitter.com/IamCharlieU, and you can follow both of us on twitter.com/altcoin_mentors. I realize I'm talking fast now. But you can also go follow us on YouTube. I see that most of you are watching on YouTube, so you probably know where the subscribe button is for that. In case you don't, youtube.com/c/altcoinmentors. Also, altcoinmentors.com/YouTube will take you there as well. Make sure to subscribe, hit that notification bell, hit the like button on any videos that you like, and every single time we post a video, you'll be alerted, and you can view that right away. We also post those videos on YouTube, on Twitter, and on Telegram. So don't be sure to not miss out on those. Herman, you said every time you go to the website, sorry, we're doing work on the site. Yes, that is correct. We don't actually have our website done yet. It is currently being designed. So you will see this page. Sorry about that. It is under construction. So that is normal. It's not just you. But the links after that will work. If they don't, please tell me about that, because that would be very bad. And then I saw that there were a few more questions, as there always are, right at the end. How long does it take to be a good trader? That depends on you. That depends on how dedicated you are and who you're following. If you're just trying to do it off of like books and self-study, it's very difficult. So I think most people in that, if they take that, it takes them a few years. But that process can be greatly accelerated by having someone who's already a good trader, and they can show you what they're doing. Can you EOS? EOS. I like EOS a lot. I think there's a lot of technical problems with Ethereum, and EOS has $1 billion to spend on paying for developers to develop on EOS, whereas Ethereum can't really do that. So it will be very interesting to see whether or not EOS competes, or whether or not Ethereum can compete with EOS, rather. So I like EOS a lot, but and I'm definitely looking for an entry into it to go long. So once again, that will be in the model portfolio in Telegram. Do I follow other traders? Yes, I do. I mainly follow traders from places outside of crypto. So everyone from LAWaveTrader.net. I also follow Peter Brandt. I think that he's been trading for 40 years, so obviously he has some knowledge from that. Let's see, who else is really good that comes to mind? I like Carpe Noctem in crypto. He has a lot of good stuff. His Medium article on learning trading is excellent. He does a lot of stuff with the Ichimoku Cloud that I like a lot. In fact, it was his videos that I learned from. Who else is good? The problem with a lot of crypto traders, quote unquote traders, is that I'm not convinced that a lot of them actually trade. Because you see people posting these P&Ls that are not very probable. So, for example, I forget who it was, but they had posted so they had supposedly caught this short squeeze and made 1,600%. So this was a 10% move. So unless they were levered up 160 times and caught the entire move, it's not a real trade. So yeah, a lot of people, I'm quite skeptical that they actually trade. And so this is why we have the model portfolio, because you can see exactly what we've done and when we did it. Like you can see there, we made a pretty big mistake where we lost 25% on one position. That was on Icon. Our stop loss should have been closer, or we should have waited for an exit or an entry closer to that. And so that was a mistake, and you can see that. Whereas a lot of people on Twitter, they only post their wins. Yeah, and we don't do that. We post everything. All right, well, is Bitcoin going back down again? Watch the replay. In summary, it could. Yeah, in summary, there is limited upside right now. That is how I'll put it. The critical moment is going to be at this trend line. If it can break through the trend line, we're going down. If it can hold above it, it's quite bullish. So, once again, thank you everyone for watching. Thank you especially to the people who have asked questions. This video would have been much less useful had you not asked those questions. So, to the people who are silent, we appreciate you too, and you should also ask questions. So, thank you for watching. Be sure to join us in Telegram, get our model portfolio, get these notes, strategy notes. They're going to be the best in the industry, guaranteed. So, thank you for watching, and I'll see you in the next video. Oh, that was the last thing. I know I've promised the Enigma video forever, and this week it is finally coming. I've been very busy with work and obviously other crypto stuff. So Enigma video is finally coming. Also gonna have a video on Ravencoin. That is one of the 100x projects I'm super stoked about. I cannot wait to share that with you. And until next time.